All right, folks, good morning. Thank you for joining me on the Federal Fiscal Monitoring Update. My name is Raja Hingorani. If you don't know me, I've been with the agency for almost 20 years now, mainly working with the federal programs, whether it be reviews, audit, investigations, your single audit reviews, your risk assessment, everything kind of falls under our division. I do have two units under my division. One is a Federal Fiscal Monitoring Division, and then I have created a brand new unit. It's called Special Monitoring Unit. So the FFM unit is basically responsible for conducting monitoring of the traditional grant, and the SMU unit is responsible for conducting all the reviews of new stimulus funding, SR 1, 2, 3. So I do have a lot of information, and we only have an hour. I am not sure if I'll be able to complete all of my slides, but in case if I do miss it, you can always, send me your questions, or if you see something that I've kind of, gone over it too fast, just let me know, and I'll be happy to go back. With said that, let's start with our presentation. So I'm going to talk a little bit about, some of the new changes that occurred in the last year. There were some changes in our uniform grant guidance, and it basically, made some major changes in the way we do our procurement. And specifically, these changes took in effect as of November 13, 2020. So any grants that were issued after that date would be kind of applicable to those new changes. And some of these changes are, they're up to you if you want to implement them or you want to keep it same, but at least there is a new guidance. One of the main things that basically changed was regarding the procurement. We used to have 5 different methods of procurement. Now they've kind of divided into 2. Mainly, one is your informal procurement method, which is micro purchase and small purchase, and the rest of the procurements sort of fall under the formal procurement methods. So basically, what they have done is they've just divided. So anything that pretty much up to $49,999 that we, because at the $50,000 our state requirements kick in, is now all considered a micro purchase. So if you may have already, if you are intending to, you can increase your micro purchase threshold from 10,001 to 25,000, and the next level is 25,000 to 49,999. As I mentioned, even though the law allowed us to move all the way up to $50,000, but because at 50,000 and above, we are required to comply with the state's bidding requirement, Tech 44031, so we have to limit that to 49,999. When you're doing that, we basically need certain information. Specifically, if you're going to raise from 25,000 to 4999, we're going to be asking you to provide us evidence of determination as a low-risk auditee from your entity's most recent annual financial report. When this came out, a lot of the folks thought that we also have an annual risk assessment where we score folks low, medium, and high risk, and they thought that that's the risk level we are talking about. We're talking about the low risk auditee that your independent auditor designates you when they're doing your audit. We are also looking for internal risk assessment and internal controls for mitigating and managing financial risks. I was talking to the folks who are getting this information from you. Basically, they are saying that there will be some random validation of the documentation that you have sent to raise your threshold. And it will also help us. For now, SR 1 was issued before this guidance came out. So, we are going to be looking at your policies and procedures based on the old threshold. However, the other 2 grants or all other grants that are issued after that, if you are going to increase your threshold, then we will be basically looking at make sure that you got approval from TEA, because all of any type of increment in threshold has to be approved by TEA. And This is the form that you are required to. This is a Qualtrics thing where you go in and you kind of request to increase the threshold. And I think somewhere in there, they will ask you to also attach certain documentation. So I had some questions, and you can probably put it in the chat. If you have, how many of you have actually increased your micro purchase threshold from 10,000 to 25,000, and then some from 25 to 4,999, and how many of you have actually updated your policies and procedures to reflect these changes? If you put it in the chat, maybe after the presentation, we can look at it. Whenever you have such big changes or any changes in Edgar, and some of the Edgar citations have also been changed because of these, they've kind of shifted, I think it's a good time to look at your current policies and procedures and make sure that they are updated. Because as I mentioned to you, the very first thing when we actually conduct the monitoring is we ask you to give us your policies and procedures, your manual. We're looking for the information in that manual. So you want to make sure that you're reviewing all your existing policies and procedures. Some will need updates and some will probably remain same. Some you will have to create new policies and procedures. The bottom line is you have to determine what procedures will have the most impact on your organization if not updated within the specified time frame, and identify what award activities will occur early on and may need the procedures. I'll give you an example. There were one or two districts that we reviewed last year still had 3,500 threshold on their policies and procedures. So when we looked at their procurement, we wanted to hold them for what the threshold they had in their policies and procedures. So because we have new thresholds, and if you're going to apply these new thresholds, we want to make sure that you at least make sure that those policies and procedures are updated as soon as you can. Ensure that all the policies and procedures required by Edgar are included in your manual. And you may have seen these slides many, many times, what needs to be in the Edgar. And I'll share with you those in a moment. But you want to make sure that those are, because if they are not, you will probably, if you are reviewed by any of our teams, you may end up getting a finding or an observation. Because auditors will go by your current policies and procedures when we are testing your procurement methods, time and effort documentation, or other internal control requirements. So here are the policies that are required by Edgar. You want to make sure that these are all in your policies and procedures manuals. And basically, like I said, we will actually ask you when we monitor you, we will send you an internal control questionnaire with all these policies and procedures, and you're required to tell us on which page of your manual is this policy located. So definitely we'll cross-reference that. By the way, we are currently monitoring about 60 entities for SR1 and about 15 for Hurricane Grant, which I know it doesn't affect in your areas. Those are basically in the Houston area and surrounded, but we are in the process of initiating about 60 more next year of SR3 and SR2. But as of now, we have issued a notification letter for at least 40 of the SR1 grantees. Here are the procedures that are required by Edgar. As you can see, time and effort procedures, even though they are not in Edgar, they are required by the ED's cost allocation guides. Definitely, we look at your cash management procedures, your procurement procedures. And when I'm talking about time and effort procedures, we really want to see a full flow of, somebody documenting the time and effort and transitioning all the way to the payroll department. We want to see the entire process, how it is done, so we can feel comfortable that, the right information was entered, the right forms were created, whether it be electronic or paper, that the payroll, and there's a clear link between the payroll and the folks that are preparing or reviewing or approving these time and effort records. We also recommend some additional procedures, such as, if you are using credit, debit card, gift, or procurement cards for expenditure of grant funds, we definitely want to see, what type of procedures you have, who's allowed to use them, where are they kept, and what kind of documentation are they supposed to provide for their purchases. A credit card statement or any type of statement alone is not going to be enough to as a source documentation. We definitely want to make sure that you have original invoices or original receipts for all the purchases. So those are the kind of that's the kind of information you should have in your policies and procedures. Also, one of the things that we have noticed that a lot of the districts do not have specific cost categories or lifetime items, in their purchasing, in their policies and procedures. We definitely want them to be part of your manual, because this is what you are using to aggregate the amounts, whether you want to use federal funding or state funding, for their purchases. So it's really important that you clearly identify these categories and make that as part of your policies and procedures manual. We like to see retention of records, policies, and procedures on that, procedures to comply with specific program requirements. If you have certain requirements that are specifically for ESSER funds, or that you're not going to apply to your regular, then definitely we would like to see some additional requirements or program procedures listed in your manual. You could call it an amendment, or you can call it and there are certain programs that are a little bit different than what you normally have as far as the allowability of cost is concerned. We like to see that your organization has also have a policies and procedures to maintain job description for each grant funded position. And I have a question from the district about this later on that we'll go through. But as long as someone is fully paid federally funded position, we're not talking about reclassified fund. We're talking about actual payment of grant funds for the grant funded position. We want to make sure that they have a current job description, because it allows us to see what exactly is this person doing towards that program. Procedures for purchasing to cooperatives. This is also really important, and we'll go a little bit more into about it to see what you need to have in your purchasing, what you need to follow for any purchases with your purchasing cooperatives. I have a chart of grants here that are available for your stimulus fund. And as you can see, this is not the only list. There's more. There's T-class, there's PPRP funds. And so we're talking about a lot of grants that are available right now for you to spend money. And as you can see, the timelines on these, we also have your IDEA ARP and IDEA Preschool. Those are the two, again, major grants that are also coming in. You have a very tight timeline to spend this money. And so it's going to be challenging to make sure that all the money is spent, it's tracked, and everything within this timeline that we are talking about here. And you all are aware of this timeline. It makes it a little bit, timeline make it a little bit difficult, because you have pre-award costs that goes all the way back to March of 2020. So even though, it goes all the way back, but it is still ending. Like I said, the SR1 will be just ending within the next 11 months. So the timeline is extremely important. In addition to the ESSER funds, you also have 2019-20 ESSA funds. That DOGA period is extended, and now it is ending in 6/30/2022. If you do not spend this money by this time, you will forfeit this money, and that money will be going back to the feds. So definitely you want to make sure that you keep an eye on this grant. You also have, your 2021 ESSA funds there was a waiver, so it allows you to carry almost 100% of those funds into 2022. So 21 and 22 fiscal year is going to be really important for you. You've got 1920 grand, you got 2021 that you basically were able to carry forward whatever you didn't spend. And now, like I said, you're 21, 22 grand. So it is going to be a lot of funding, a lot of different areas where you will have to be very careful, specifically accounting wise, how you're tracking them, different grants. I want to show you basically, these are the challenges that you're going to have when you're managing multiple awards. Number one, overlapping of grant periods for multiple grants. You are required to, track these expenditures separately for each funding source. So again, based on the fiscal year and the program intent code. And for example, you have special education. You right now have close to 7 different grants where you can spend that money out of special education. So you have to make sure that certain grants, if you charge it to ESSER grants, then you need to worry about the MOE requirements. And so there are so many different things that are playing in here when you have multiple grants that you have to manage. And I know this is not an easy task, but since we do have, I want you all to pay close attention to the way the things are recorded, the way the things are show up in your financial records, because at the end, when you are selected for monitoring, that's the information that we'll be looking at it. Expenditures must be within the period of performance. We talked about this, so you want to make sure that everything is completed as per the NOGA period. None of these grants allow carryover, so that's the end of the program. We've extended NOGAs for the ESSA program, so they also play into these. Again, when you're dealing with ESSER funds, we want to make sure that you have justification or documentation that they were spent for COVID-related activities. So definitely that also has to be taken in consideration. And finally, the application of indirect cost rate. Most of you will not see a cost rate change from year to year, but if you are seeing a difference, then you can actually, even if it's the same grant, it's in 2 different fiscal, you're spending it in 2 multiple years, you can apply the current year fiscal rate, indirect cost rate towards that grant. So that is something you have to be careful. Also, when you are closing the fiscal year, you want to make sure that you're carrying forward the money that you have unspent or that you have left over that is carried forward into the next year. So different school districts do different way of doing these things. So I just want you to be aware that these are the obstacles or the areas of concern that you should have it. I want to show you the lapse fund. November 1st was the last date for IDEA B grant, and and this is I have it. As you can see, almost $1.5 million of IDEA B funds were lapsed. This is not a big number compared to $1 billion grant, but there are some like in the areas of 100,000 and above, or 50 to 100,000. There are some pretty good numbers. So again, this grant was extended from 1919 to all the way to 2021. So like I said, it's a 2-year grant, and sometimes you already had your new grant come in 2021, then you have your SR1 funds come in. So you really, really have to be careful. Here's another chart. This is basically your IDEA B preschool. As you can see, almost 185 of 640 grantees lapse fund. And this was $2.1 million, but this was actually the 10% of all the IDEA B preschool grant that TA awarded. So this was almost 10% of the grant was lapsed. So the idea behind this is I'm trying to tell you is that you have to be on top of the older grants as you move forward into the newer years, that make sure that you are paying attention to the grants that have been issued in 1919 or 2021. So again, keep an eye on those. The use of funds for ESSER 1, 2, and 3, pretty much as we talked about it, the pre-award cost goes all the way to March 13, 2020. The funds from each grant may be used for allowable purposes of all ESSER grants. There is no supplement, not supplement requirement, but there is a caveat. We'll talk about that. No local MOE requirement, but has the state level MOE requirement. Again, we'll talk a little bit about that. You still have to make sure that your MOE, you are in MOE compliance, and no carryover is allowed after the end of the grant period. As far as the IDEA ARP and IDEA preschool ARP, again, I was told that there is no separate application, just a column added to the regular formula grant application. Same requirement as IDEA B and IDEA preschool. Again, this is what I've been told. I haven't seen the guidance, so let me know if this is if you have different guidance. So this was basically, I presented this at the TASBO last week, and at that time they didn't have the guidance out. So at the TASBO, I was told that both the grants ended in 2024. But yesterday, I was told by our grant administration that they actually ended in 2023. So again, we don't want to be confused here. We want to make sure that we have the ending period correctly, so you can plan, you can budget all your funds. Again, even for these two grants, the maintenance of effort requirements have not been waived, no exception. Both of these grants, have still set asides for CCEIS, Comprehensive Coordinated Early Intervening Services, and a proportionate share of funds for private schools. But just like your regular IDEA B, you will still have to have set asides if you were designated as the one with CCEIS, or if the private schools participated in your area. Folks, we do monitor reserve funds, whether it's CCEIS or PNP. When we ask you to provide documentation, we like to see in your financial records how you are tracking these funds. About a week and a half ago, I was told that some of the districts have not spent their CCEIS fund within the prescribed or specified time that they had 2-year window. So, and some didn't even track, so that's going to be really hard, because, you are supposed to use local option codes or whatever needs, that you have to, whatever means you have to do to kind of segregate this cost, within your financial records so it can be tracked, and as the law says that if you at the end of the specified period, if the funds are not obligated, then they will be returned to the Department of Education. So do keep an eye on this if you are designated to have CCEIS funding in your for your school district. Similarly, if you have PNP funds, we like to see them identified and tracked separately. We want to, because these are the funds that basically districts have control over, and they are the ones that are supposed to spend it. They are the ones who are going to be buying stuff for the school districts, so districts need to keep the control over these funds. So, and again, here, ESSER 2 and ESSER 3 were not, but ESSER 1 funds and are also subject to the equitable services per Title I. Our first round of 20 reviews, almost 17 districts had PNP funds, so we are asking questions related to the use of PNP funds where, if they purchase any inventory, then we are going to be asking for the inventory of PNP funds at the school district, at the private school. Again, like I said, once the program is over, then that equipment is supposed to come back to district, or it could be used for other federal programs. Allowability of costs, allowable uses of funds related to preventing, prepare, or for responding to COVID-19. Basically, all of your ESSER funding needs to be based on that. The cost must be necessary and reasonable for the performance of the federal award and allocable under 2 CFR 200 subpart E must be obligated within the period of availability. And if you have multiple year contracts, you want to make sure that, you are only allocating costs based on the use, whatever the time period that you can allocate the cost, you don't want to charge the full 2-year contract upfront. You want to kind of, charge it according to the allocation, according to the cost benefits to the school district. Of course, all the separate funding source must be tracked separately, and everything must be documented, source documentation, financial records to make sure that if you're audited or reviews, that you have the information available for your auditors. Folks, one of the things that USD is really big on is, improper payment. They also monitored us last year on hurricane grants on the improper payment. And I'm so sorry. I don't know why I have just... So you want to make sure, let me explain you what they are basically, if, and some of you may have already be familiar with, it's the payments that should not have been made, or that were incorrect amounts, payments that do not account for credit for applicable discounts. This is really important. If you're using, if you received a discount for something, or even some other credit or equipment, something, it needs to be accounted. We definitely don't want to see duplicate payments. And here's the deal. You spend a lot of money from pre-award costs from Fund Code 199. And we'll talk a little bit later about the reclassification of these funds. If you're claiming reimbursement in the fiscal year, in the next fiscal year, then you really cannot actually reclass those funds to that fiscal year. So it becomes really important for you to keep the documentation for your purchases from your 199 or 420 and how you accounted for, because the feds don't want you to go in and charge the same amount that you got reimbursement from federal funds to another federal agency or state or something like that. So they want to be very clear on that. Payment of goods or services not received, basically, if you purchase something, we want to make sure that you have a good internal controls, that you have received all the goods and services that you paid with your grant funds. I'm going to go into now, FAQs from SR 1, 2, and 3. I've tried to address some of your questions in these, but if not, like I said, I do have the district's questions at the end of this presentation. Are pre-award costs allowed? Definitely, we talked about it. If expenditures are reclassified from other local or state funding sources, LEA must maintain adequate documentation to support the reclassification of original expenses. In some cases, you will be able to reclassify on your books. We can see, you paid for 199. You basically, are now reclassifying to the ESSER fund. In some cases, we are not going to see transactions in your book because if it's a different fiscal year, but you still have to maintain all the documentation. All the reclassified expenditure must be allowable to the extent they would have been allowable if incurred after the effective date. So when you're reclassifying massive amount of cost, from whether it's payroll or non-payroll or something, you got to make sure, because we are still going to ask you to provide us a justification of that cost. So you want to make sure that that cost is justified as if you are incurring that after, after the effective date. No construction cost should be included in the pre-award cost without receiving a prior approval from TEA. So this is becoming a very common question. I think you also asked me about this question. Are stipends allowed from ESSER funds? Yes, the cost is allowable, but the district must provide the following. They still need to provide the documentation or justification for stipend payment of grant funds. The stipend must be documented in some type of a board action, not just in the plan. Auditors will look for documentation that the stipend was either in the board approved or in the policies or procedures. So definitely you can pay them. You just have to show it to us that it was broad action or whatever it was board approved, and basically provide the justification. Normally when we have stipend from your regular grants, what we do is we tell you that any compensation of federal funds requires you to have a time and effort, even if it's stipend that you're not really showing any hours work. And in the normal circumstances, we will tell you that whoever the supervisor can basically say, here's a list of employees I'm giving stipend, and this is the reason. This is based on the board approved policy or procedures. They are getting the stipend, and they sign off on that, and we would accept that. Like I said, if your policies and procedures and anything with the time and effort, I know ESSER funds don't have time and effort requirements. There is no supplement, not supplant requirement. However, if you have specific policies and procedures, as I mentioned to you, that we go by your policies and procedures, then you really need to maintain the time and effort records. When we are reviewing your pre-award costs, and we've done a lot with the ESSER 1 reviews that we have started, I would say almost all of the district, spend a lot of the money, 80 to 90%, or maybe I'm not sure if everybody did, but a lot of the districts spend a lot of their money based on the pre-award cost. So what we're doing is we want to, number one, make sure that the reclassify is incurred within the allowable period. Now, what happened a lot of times, a lot of the districts, reclassed their pre-award costs, then they got PPRP money, then they went back. So we have to kind of figure it out at the end, where were these costs reclassified? Were they reclassified from the ESSER, or did they go into, PPRP? So you really need to make sure that you are tracking your reclassification, making sure that all the journal entries and all the supporting documentation is there, because we are going to compare expenditures reclassified or replaced with the federal funds, because like I said, in some instances, you are not going to be reclassifying those in your accounting record based on the total amount of pre-award costs approved in the grant application as amended. In some instances, we've seen that reclassification costs exceeded the pre-award costs approved in the grant application. Now, you can always go back and amend your budget to do that. So that's not an issue, but we are, like I said, monitoring. If that's the case, we will let you know that it's exceeding that. We will review records that identify and support your itemized transaction related to all reclassified costs. We will also, select some transactions. If you have, say, payroll costs that are reclassified from state or local funds, we might select just sample, payroll employees, the transactions for the employees paid with your state and local funds, and ask you to give us the salary authorization or employee contract to make sure that this was a teacher that was paid, and it based on the payroll records that you have. We were asking job descriptions for these, for the reclassified, but I was told that a lot of the districts really don't have policies and procedures or maintain a job descriptions for folks that are paid with the state and local funds. So you do not have to, even if we have asked you, you do not have to worry about that. I think we sent out letters to just 4 or 5 before my good friend David Mark started to call me and say, hey, look, a lot of the districts really don't have the policies and procedures to maintain job description for state-funded employees, state and local funded employees. So we're fine with that if you don't have that. So this is what I talked about. Can I reclassify expenses paid in fiscal year 1922 ESSER funds in 2021? No. If the district is claiming funds from prior year that were paid with the general fund before they received the award, then the receipt for that portion must go back into Fund 199. You can only move expenses if it occurred in the same year from local funding sources to ESSER funds. Note, this will be a reconciling item on your CFA. So you paid $1 million in 1920. You are going to ask for the reimbursement of that amount, but the amount that in 2021, that amount will basically go into your 199. You had a decrease in fund balance. Now your fund balance will go up for that amount. You will not be able to show expenditures in your schedule of expenditure in your single audit, because basically it's not in your books. All you're doing is just replacing that fund. So what you will do is you'll have your independent auditor will know what to do with this. They will have a reconciling item on the CFA, and you will have to keep all the paperwork from the original purchase and expenditures. Some of you received PPRP funds from 261 or 281, which is not really directly related to your actual NOGAs for 261 or 281. Again, the same situation will apply. You would basically put it in your CFA that these were from 281 PPRP reimbursement. So if you did receive that, you will follow the same procedure. Since supplement not supplant required, can these funds be used for any activities paid with other funding sources? No. The LEA has the flexibility within the allowable uses of funds to supplant state and local. However, all expenditures of ESSER fund must meet the intent of the program and statutory allowable uses of the program funds. Again, the expenditure must be allocable, reasonable, and necessary to carry out the program. Yes, it does allow you to spend for anything, that you want to, but at the same time, do remember all these things, you still have to provide justification. It has to be tied to the COVID-related activities. And this is our form that TA has it on our website. I'm sorry, I'm going a little bit too fast because I only have 20 minutes left. Am I correct? Or 25?
You can take longer, Mr. Hingorani, if needed.
Okay, sounds good. All right, let me see how far we get in the next 25 minutes. Do ESSER funds have to comply with the procurement standards? Absolutely. All your purchases made with ESSER fund must meet both the local, state, and federal procurement requirements. Now, if you reclassified something, and you had, say, non-payroll costs, we're not going to go into whether we definitely want to see your invoices and all those things that you paid for, but we're not going to go in as detail as we would normally go. We are expecting that you did comply with the state or local procurement requirement to procure that. And so we are definitely looking more into basically that the things were purchased, you have invoice, you have purchase order, it was properly authorized. And so definitely when we are testing that, we are looking into it. A lot of you have asked about the lease purchase or capitalized leases. You do not have 6,500 in any of your ESSER application, if I'm not mistaken, but you can have operating leases. You can allocate the cost. You're renting a copy machine, and you have a good way of knowing that is being used by the program, whether it's, proportionately or full or whatever it is, you can definitely charge that. And then you can charge based on its use during that allowable period. Again, I just mentioned this, I kind of jumped the gun here. All pre-award expenses reclassified to ESSER fund should be in compliance with procurement standard applicable to the purchase at the time, applicable to those purchased at the time of purchase. Procurement must comply with suspension, debarment, loss. Again, we are not talking about reclassified costs. We're talking about actual costs. Yesterday, someone asked me a question about the suspension, debarment. All federal funds, any type of purchase you're doing, they must comply with this requirement. And the easiest way you can do is just go to the sam.gov and check the vendor that you're buying from. The only thing that we ask that if the purchase is more than $25,000, that you keep a printout. The other option is you go to the vendor and ask them to give you a certification. But the easiest thing is that you keep, because when we do monitor, and if we have an expense that exceeds $25,000, then we will ask you to provide us that documentation. So do keep that in mind. It should be part of your policies and procedures. Some of you may have just a simple policy: comply with suspension and debarment. Yes, that is a good policy, but at the same time, you should have procedures to what needs to be done to comply with. So a lot of the smaller to mid-sized district purchase a lot with the purchasing cooperative, and I've seen that in the last year or two, and I do get a lot of questions on purchasing cooperatives. Now, your ESCs, we have given all the ESCs the sole source letter. If you're purchasing something directly, or services from ESC, you're good. They all have the sole source letter given to them by Corey Green, so you don't have to worry about that. However, when you're purchasing through a cooperative, you want to make sure that you at least have an agreement with the purchasing cooperative. A couple of years ago, one of the district purchased a lot of goods from the purchasing cooperative. Believe it or not, their independent auditor questioned a lot of the cost that was purchased through a cooperative without an agreement. So I don't want you all to go through that, because you definitely need to have a purchasing agreement to purchase from a cooperative. The procurement made through these cooperatives, they must meet your state and federal procurement requirement. If you want to make sure that whatever you're purchasing from the cooperative, that is meeting this requirement, just because you're purchasing from the cooperative, you still have to make sure that you have to comply with those requirements, which may include obtaining quotes, or if it's more than $250,000, to conduct your independent estimate or cost price analysis. So you definitely want to make sure that you are complying with the state's federal procurement requirement. Even though in one section it says it encourages you to buy from the purchasing cooperative, but at the same time, it is also asking you to comply with the procurement requirement. Here's a big question, and this is a little bit complicated. Do I need to get multiple quotes from purchasing cooperative for procurement made under small purchase procedures? Now, what's a small purchase procedures? The small purchase procedure is basically, as per the federal standard, is $50,000 to $249,999. However, in Texas, when you're talking about 50 to 204.99, we're talking about compliance with the state's procurement compliance. So when you're purchasing from the cooperative, you want to make sure that if the state is complied with this requirement. Now, most of the time, like if you have a purchasing cooperative, they have 7 methods that they can purchase through that allows you to buy as per the 44031 to comply with the state's bidding requirement. There are 7 methods. All but one of the 7 methods, only one method is more restrictive than the federal procurement requirement in the EDGAR. So those are allowable. Only one method is considered more restrictive. However, only one method of the 7 options that is less restrictive is when then the EDGAR purchasing through a cooperative is an interlocal contract. If you're purchasing cooperative, if you have an agreement with them and it is based on the interlocal contract, in this case, your EDGAR requirements are more restrictive, which means that if you're buying from between 50 to 249.99, you need to make sure that you comply now with the federal requirement, which is for you to get at least minimum of 2 quotes. So anytime you're purchasing from a cooperative and it is based on an interlocal agreement or a contract, in that case, I would recommend that you at least get 2 quotes, which is not a big deal. You're just getting 2 quotes, but from that cooperative or from the cooperative or outside. So you want to make sure that you are complying with that, because Again, like I said, they may be in compliance with the state for the rest of the 6 requirement, but that one requirement based on the interlocal agreement is, and that was how a lot of the cooperatives are that you have an agreement is just based on the interlocal agreement. I'm sure you're going to have a lot of questions on that, and I've tried to do as much as a good job of explaining that, but if I didn't, I do apologize, and you can always send me follow-up questions. Sole source is again a no-no. If you are going to be using sole source, you got to comply. There used to be 4 requirements, but now what they have done is they have designated micro purchase, as a sole source under for $50,000 or $4,999 a year. So that is now included in that. So if you're purchasing through a micro purchase, you're fine, as long as it doesn't exceed their micro purchase threshold. But the rest of the information here is pretty standard. You do have to comply with all of them to buy sole source. Let's talk about constructions, how to charge construction costs to ESSER fund. Well, number one, you must have a written approval before construction is advertised or bids are placed in the market. This requirement applies to all construction, remodeling, and renovation projects. You must comply with general cost principle. It has to be reasonable, necessary, allocable. You need to comply with all the procurement requirement. The construction itself needs to comply with the Regulation 76-600, including Davis-Bacon wage requirement, and it must be timely completed. Remember, you guys have the districts have, only 2 years for each of this grant to complete all these things, all these projects. So it has to be very timely. And here's our pre-approval for construction remodeling that many of I saw based on the worksheet that you sent me, many have already got an approval for this. So these are the 3 areas that you all are probably aware of. There are 3 types of construction, and I'm not going to go into detail. You have minor remodeling, maintenance and repair costs, and equipment and capital expenditures. Again, everything has to be approved by TEA. You just have to make sure in which category is the project falls into. What is Davis-Bacon Act? I started to deal with Davis-Bacon Act when I audited stimulus funding in 2009, 2010. Those of you who have been around, this was the ARA funding. So this is my second rodeo with stimulus funding. And we literally had to go on site and ask for all the logs. And the idea behind this act is that you must pay workers no less than locally prevailing wage and the fringe benefits for corresponding work in that area. So if you have a big, like in one area we went, they were building a big shed or something like that. The contractor, the subcontractor, they all had to pay the prevailing wages. So, and it applies to basically any federally funded project that in excess of $2,000. It includes construction, alteration, repairs, painting, and decorating. So you can get some more information on Davis-Bacon Act. I really haven't come up with the work programs yet, how we are going to monitor that, but I'm pretty sure we'll have to figure it out. It also depends how much monitoring USDE wants us to do on site and looking at, because some of this information may not be very easily done on the desk reviews, which is what we have focused so far is basically desk reviews. We still haven't planned anything on site unless we see an extreme need to do that. But we're going to keep most of these reviews to a desk reviews, but there are some instances where, again, we may have to kind of do certain type of monitoring. That's only we can do it on site. The Buy American provision, a lot of us are still thinking this Buy Americans, the same Buy Americans we had to comply with during the ARA. This is not the regular Buy American. This is per section 200.322. It basically it's a domestic preference for procurement requirements, and basically it is a little bit less than what the Buy American is. It basically tells you that, to the greatest extent, and practicable under a federal law, provide preference to purchase, acquisition, and use of goods, products, material produced in the United States, including but not limited to iron, aluminum, steel, and cement. So again, this is something we are dealing with after a long time. So we will have to come up with what's practicable, what's reasonable, and all those things. So we are in the same boat as you all are. We are also learning because, there are certain things. Every day things are changing. We have guidance from USD, some of the stuff like I was at the TASBO last week, and I was told that when you are doing MOE calculation, MOEQ or equity calculations, you can, the state guidance says that you cannot include FTEs paid with the federal funds, whereas, one of the other presenters said, no, you can include all of those. So we are now asking USD because USD is a little bit silent on that. And so we are asking USD to kind of clarify that. So the guidance is changing sometime, and we are all learning. And I'm sure when we are monitoring, we will work with you to make sure that, we kind of understood the same thing or applying the same thing. If not, we will try to correct it. And there is more information on Buy American, basically what it means to produce in the United States or manufacture products, If the LEA reclassifies salaries of staff, does it have to maintain semi-annual certification? What are time and effort requirements for ESSER fund? LEA is not required to maintain time and effort documentation for reclassified salaries unless they were required to maintain it by the original funding source. Folks, we saw back and forth reclassification to the Title I and then, to the PPRP and all those. So if you reclassified something from Title I or other federal funding source, you were required to maintain time and effort documentation. So we will ask you to, but if you reclassified from state or local funding sources, you were never required to have time and effort documentation. Some of the state allotments have the same requirement as the federal funds. So only if your original funding source that had that requirement, we are asking for time and effort documentation. Otherwise, we are not. If the employee is paid 100% from federal funds or working on a single cost objective, the employee is not required to maintain any time and effort documentation, including semi-annual certification, unless your local policies and procedures requires all of your staff to be paid with federal funds to maintain it. We got to remember, after all, these are still federal funds. So if you have a policy that says across the board, all your staff is required to maintain it, to be on the safe side, I'd say go do a semi-annual certification, you're done. But if not, you need to be careful about that. Now, time and effort is required for staff split funded between ESSER funds and another funding source that requires time and effort. You paid someone 50-50, 50 from ESSER, 50 from another program that has a requirement to have a time and effort. In that case, you want to show the 100% of the activity. So in that case, you would be maintaining a time and effort. Is there a local maintenance of effort requirement? Absolutely. Since there is a state level, no, but since there is a state level MOE requirement, both IDEA and SI MOE requirements will still apply. LEA should be cognizant of all these requirements when they are supplanting ESSER funds. And I think I have a question from the district also that I asked Mr. James Connolly, my very good friend, who's actually, spearheading this whole MO equity, and he gave me a little bit of guidance that I'll show you. But yeah, definitely, you want to make sure you want to use the calculators that we have, MOE calculators. Now, granted, a lot of these calculations have been done, and it is up to you to basically report to us like, hey, I moved so much of the local and state fund that were originally calculated in the MOE calculations, and now we have done the recalculation and kind of reported. So it's really self-reported. TA right now has no plans to go back and do all those kind of MOE calculations. So that's why they're asking you to provide that information. To avoid IDEA MOE penalty, LEA should not reduce their spending of special education from state and local funds. That's as clear as it gets. If you use those, special education from state and local fund, and now you're reclassifying all of them, a big chunk of it, then definitely it should impact your MOE. I just talked about maintenance of equity that may also impact LEAs, and TA has provided guidance on this requirement, so you can go on to this page. Will LEAs be monitored for inventory controls? Since so much funds are being spent right now, or on buying all kinds of capital outlay and equipment and all those things, yes, it's going to be a big deal on basically monitoring of the inventory control. I remember during the ARA days, we used to go to the districts and ask them for their logs and literally go from take some of the stuff that were purchased with the ARA funds, and then we would ask them to show us where those, where it was located, as it said in their logs. So do keep a really good inventory control of everything that you're buying with the ESSER fund, specifically your technology items. Those are the ones we call it walkable items. If they are lost, stolen, or destroyed, do keep really good policies and procedures to make sure that if they're stolen or something, that you have reported stolen and all those things. So definitely it will help you, and specifically that we are buying so much with the ESSER funds that we will probably need all those records when you are selected for monitoring. All assets and equipment purchased with grant funds under the capital outlay must be approved by TEA in the grant application, and both on-site and desk reviews will include reviews of inventory controls. Finally, at the district FAQ, these are the questions. When will the system allow us to amend NOGA for the other 1/3 of the ESSER 3 funds? And the second question was, when will the ESSER 3 be released, and how will this process be conducted? Will it be through eGrant? It will be through eGrant. It will be done in November or early December. I think a presenter also mentioned this before me. Will there be any training or issues popping up that could alert districts on unallowable costs being denied because they didn't meet the COVID or learning loss definition? Probably not. The allowability is primarily dependent upon LEA's documentation to justify, how it was allowable, how it was reasonable, necessary, and all those things. It is no different than any other grant. So definitely, we can't just go in there and say we can tell you how it should be done, but we're not going to say, what is the unallowable. Now, later on, when we are done with the reviews, maybe during the middle of the reviews, if we see something where we are seeing a lot of unallowable costs, I may share some findings with you. So definitely we'll do that. This is about the district that submitted a request for pre-approval on a construction project. The pre-approval was approved in July. The project was bidded and awarded during the pre-award period, and construction is ongoing. If all federal regulations are followed, such as David-Bacon Act, is this project eligible to be included in the application as an amendment? If so, do we include this project in the ESSER 3 amended application as pre-award costs for the whole project, or partial pre-award and capital outlay for the approval date going forward? So this came right out of Corey Green. Basically, I had to ask him this question because he's the one who's basically approving your construction project. So the amount of prior to the submission of the amendment containing the construction cost is considered pre-award cost. So anything, you had an amendment, anything you've done so far, it needs to be in the pre-award cost. However, any ongoing costs that you have for the project after the amendment is submitted through regular budgeted items. Hopefully that answered your question. If the application is awarded, approved with HVAC and building improvements and buses, it is fair for us to say that we can proceed unconditionally, provided we follow all procurement law. Please clarify. Unconditionally? No. The LEA must document allowability and justify expenses, follow all the procurement and federal grants rules and regulation, and to make sure that that you followed all those. Any items approved in the application can be denied in the audit. If we don't have all the supporting documentation, even if it's, and that happens all the time, things are approved in the application, it still has to meet all the requirements of EDGAR and ESSER and all those things. Is it allowable to code utilities, more specifically energy, to ESSER grants? And a lot of our answer has been it depends. You can provide a justification, like, you had to keep the lights open during the COVID, or you had, I don't know. I mean, it really depends upon a justification. And if you have a good justification, you can. Our district will be administering retention pay for all district staff later this fall. What supporting documentation local policy will auditors be looking for? We talked about stipends before. I think retention pay kind of falls under the same. We will be looking for board approved policies and procedures for retention pay, justification of cost, and time and effort if required by local policies and procedures. So it has to be something that is approved by the board, justification why it was approved, or procedures outlining that for us to kind of pass it. Okay, this is the Title I maintenance effort. This is my good friend James Connolly, who does MOE, helped me with this because I wanted to make sure that I have the right information for you. The impact of ESSA, LEA, MOE will depend upon the extent which the LEA supplants salaries that are typically charged to local and state funds. LEAs are encouraged to utilize ESSA, LEA, MOE calculation tool, which will provide an indication of their compliance status. We talked about this. If you think that you are moving a lot of the money, go ahead and use the calculation tool to see if anything has changed. With the ESSA, at least you have the 10% difference. The Idea B doesn't have that luxury. So I think you just have to see. I think you might be okay with the ESSA because of that. You just have to meet the 90% of the previous year's expense versus Idea B, it has to be 100%. Please note that the LEA reclassifies fund after they report expenditures to TSDS. They must inform his office, which is Federal Fiscal Compliance and Reporting Division, by emailing to this. And I think he's already sent the letter out to all of you. If you do think that things have changed, then you let him know. Supplanting may also impact their compliance with Idea B, LEA MOE, comparability, and local MOE equity. So yes, anytime you have a reclassification, you got to make sure that you are watching out for these things, Is it necessary to have a job description included for fully funded new ESSER position, but reclass? Yes, you should include job description position fully funded with ESSER, but no, if your payroll cost was reclassified from state and local fund, unless your district require job description for all positions funded from state, local, and federal funding sources. Best approach for compliance with ESSER: ensure that cost is allowable and allocable. Expenditures are meeting all your EDGAR requirements. It's aligned with COVID-related activities. Is recorded correctly in your financial records, because you want to make sure that, it matches, all your budgets are matching, all your fiscal year, the way it is, maintain all the source documentation, and of course, the timely information. I know it is a lot. You will be getting some lot of random, validations from different departments, and some of you who are lucky enough to be, receiving basically reviews from us, So I just wanted to share you. This is what I think Corey also shared with you. There are so many monitoring of our agency that is going on. I'm personally involved with a couple of them. And I have been told that next year is going to be probably one of the most monitoring that we've ever seen, and it has to be because we've never received so much funding, more than $17 billion in funding. So the feds are going to be looking more and more to make sure that that money was used for the right purposes and, but based on the author's laws, rules, and regulation.